Real estate investment trusts, or REITs, are on a tear as they reported better than expected first quarter earnings, and a record number of REIT companies have just issued IPOs.
So what does this really mean for the overall economic environment, but perhaps just as importantly, how can you take advantage of it? Craig Leupold is Green Street Advisors president. He's here to tell us what his favorite REIT picks are right now. And for people who just aren't familiar with REITs, what makes them very attractive is their dividend, correct?
Correct.
So let's
their dividend and their growth prospects as well.
So let's draw upon that and really talk about the atmosphere and why it's getting better for REITs.
Sure, I think you have a few things. Obviously, you have an improving economy, and that's a positive, and that it drives demand for space, whether that be in apartments or whether that be in industrial properties. It drives consumer spending, which is good for retail-owning real estate companies. And at the same time, you've had little new supply added on the commercial real estate front. And part of that is obviously we didn't have a need for new supply, but supply's been held in check, so you've got limited supply and you've got improving demand, and that's driven some pretty good growth in NOI. At the same time, we have a very low interest rate environment, so that's, you know, in a low return world, real estate's pretty attractively priced today.
Yeah. By the way, the rates have come down from 11% in February 2009, the worst of moments, down to about 4%, which is about the average right now. I think I got that right. But people warn, there are some folks who say, don't treat a REIT as a bond. It has these great interest rates and other aspects of it that some people say are similar, but this is a real estate play. The difference, though, is that the real estate cycle tends to be much longer than the market cycle. So even though it is a stock market play, since the real estate has just begun to take off, it might outlast this particular bull market rally, correct?
Well, certainly. I think real estate is, remember, any office building, say, is comprised of longer-term leases, 5-10-year leases. So the cycle tends to be drawn out longer than any sort of maybe market cycle when you look at maybe the bond market or stock market. But more importantly, I think you're investing in a collection of leases that has growth either built into the leases through inflation protection, if you will, and at the same time you're signing new leases that are at, you know, ever increasing rents at this point, and you've got occupancy pickup as well. So the growth characteristics are pretty good for commercial real estate at this point. I mean, we're forecasting growth in earnings over the next couple of years of, you know, in the 8 to 10% range. So not only do you get a dividend yield, and the average dividend yield today is about 3.3%. So not only do you get your current dividend yield, but you have growth characteristics as well.
Sold. So let's get those growth characteristics into our viewers' portfolios with your picks. You're focusing on two subsectors. Let's get to the first one, specifically high-end malls. What are your names here in this space?
Our favorite names in the space are Simon Property Group and Taubman Centers. They both own very high-quality malls, generate higher per square foot sales than most of than say the average mall. You know, malls are very well positioned. They tend to own good real estate in high-quality areas, and with Simon and Taubman being at the upper end of that group, you know, the high-end consumer has held up very well. We've seen good retail sales, and we think that both Simon and Taubman are well positioned for future growth.
Okay, now, Craig, anybody who lives in any major city, particularly in New York, knows that rents are sky high right now, and there are some REITs that focus specifically on rental properties. Which ones appeal to you most?
Yeah, equity residential would be the one that appeals to us most. Excuse me. Not only are we seeing good demand on the tenant side, and yes, rent growth is starting to slow. We've had several years of above normal growth in rents. We've seen occupancy gains. So it's going to be tougher here to push rents on a look-forward basis. Having said that, we still see good growth for the apartment-owning companies, and in particular, equity residential. It's the largest of the apartment companies. They, at this point, trade at a very attractive valuation in our view. It's a blue-chip REIT that's trading at a big discount. And in fact, you can buy equity residential today at roughly a 5% discount to its underlying real estate holdings.
Okay, Craig, good to see you. Thank you for talking about REITs with us and giving us some names. Craig Leupold.
Have a good weekend, Craig. Well, sports media giant ESPN reportedly working with major wireless carriers right now.